Crypto Hotep here with another investing video. This video, we're going to break down just the differences that I noticed between the Clorox company and Kimberly-Clark. Now, if you're watching this video after the week 57 update, then you know the reason for the video. If you hadn't, then basically the reason we're making this video is because within the family portfolio, which is on the investment journal playlist in the channel, on week 57, we made a selling move to liquidate the position of Clorox in our family portfolio, and we replaced it with Kimberly-Clark. And the reason was I saw some fundamentals of Clorox as I'm getting better with financial statements and kind of developing my own rules with how I evaluate companies. A couple things stood out. So this video is just going to be comparing those things, looking at both companies, Kimberly-Clark and Clorox, and then also talking about what I usually look for in companies when I'm looking at their financials and doing some fundamental analysis. So again, as always, guys, you like the video, feel free to like, subscribe, comment, let me know what you think. But by no means is this financial advice. The tool that we're going to be using today is a free tool, and it's called stockanalysis.com. I know there's a lot of tools on the market. You have Snowball Analytics, that's real good, and all those. This channel is just starting up. I just started this channel last year, so we're trying to keep those expenses low. Stockanalysis.com I found is one of the best tools ever, and it presents the information for my stocks and my companies very easily and concisely. So that's the tool we're going to be using. Anybody could use it. And so when I went to Clorox, first thing was I went to M1 Finance and I saw my position in Clorox and I was down considerably. That didn't really start me as a surprise. It just caused me to look into the company and look at their financials. So what I did was I hopped into stockanalysis.com. As you can see, here to the far right, you have your technicals chart. So you have your price chart. It goes from 5 years all the way to the day. 5 years kind of stood out for me, down over 27% in a 5-year span. That's pretty startling. But, as always, long-term investor, if you went to the max, that gain of 3,730% ain't bad at all. And then most of the time I'll scroll down to see what the quote-unquote analysts or the professionals say. So this looks like we have a price target of 152 and 50 cents price targets, which is only about a 10% upswing, and analysis have said to hold the stock. Okay, nothing too major there. And then I went into the financials and looked at the income statement. I take off the trailing 12 months because I usually just look at it year by year. And again, this is the free version where if I wanted to get even more data, you could upgrade and pay, I think a monthly fee is maybe around 10-15 bucks a month or something like that, where you can get a little bit more data. So here, the years, though, 5 years here the 4 years here do me just fine. With my analysis. Now, as my account grows and those type of things, more than likely I will potentially upgrade, but that won't be in the near future here. So if you've seen me analyze stocks before, first thing my eyes go to is the revenue, and I like to see the revenue grow somewhat. Clorox for the past, since 2020, has been somewhat growing very, very slowly. So that's been very stagnant. Not a big area of concern for me because it hasn't really been declining too drastically. It's been staying in somewhat of a channel here. Then I look at the operating income. I typically like to see this increasing. We had a drop off in 2021, and then we can see it slowly has increased here from 2022. Okay, not a big thing there. And so I will go back up and I'll go to the balance sheet here. And then I'll look at cash and cash equivalents, okay? I typically like to see this growing. Now, they ballooned up in 2020 for obvious reasons. We're talking about Clorox here as a reminder. And then it dropped off, right? So the euphorism of 2020 happened with them. And then reality kicked back in 2021. And it's been kind of up and down. Cash and cash equivalents have been up and down so far. Uh, the total current assets and total assets. I normally like to see with your total current assets and total assets, obviously assets outweigh the liabilities, which are right here. And your liabilities, I'll look at long-term debt. I'll see what long-term debt looks like. Nothing really too bad here. Pretty much stagnant here. Nothing has really changed too much here. Retained earnings. Retained earnings is another thing that I've learned from Warren Buffett. That's one piece that he looks into, and you want to see the retained earnings actually increase. You don't want to see them being taken out or decreasing. And the retained earnings are basically, again, it's net income previously earned that has been paid out. So when we talk about net income is usually the revenue minus the bills, quote unquote, right? So everything left over after the bills, including the dividends that are paid out. Retained earnings is that net income without with the dividends earned not accounted for. So you want to see that increased because that means that the company has more money to put towards the company here in the retained earnings. As you can see, we have decreased substantially here, and it's gone down every year so far. So that kind of perked my interest. Shareholders' equity, I normally like to see this going up, and this has been slowly declining right here since 2020. And then total debt, really, this has really stayed kind of stagnant. There's nothing too much that's kind of eye-opening here for me. And let's go to cash flow. Again, net income. I like to see this increase because remember that's revenue minus the bills. But again, drop off. Looks like it hit a bottom here in 2023, and then 2024 was slowly but surely coming back up. Very, very slightly though. So again, drastic difference in 2023. They did rebound for net income, so just keeping that in mind. Operating cash flow here, I normally like to see that up. Really hasn't been up here. And free cash flow. I like to see free cash flow increase over time, and it hasn't been. This has also been decreasing as well. So these factors had me really looking. The other thing was, I believe I looked at the ratio. We looked at the PE ratio. The PE ratio seems to have leveled off, so I wasn't really worried about that. There is a bright point though. I look at return on capital, and I'd like to see this going up. Return on capital is return on invested capital for the shareholder. So I like to see this double-digit percentage growing and growing year by year. So we did taper off, and then it caught itself, and it's going back up now. So I did like to see that. So, there were a couple things that stood out, and then we went to the dividends. 3.53% dividend yield, which is fine. But then my eyes got here. This is something I really don't like to see. And with them not having the free cash flow matching this, I don't like to see this over 100% of a payout ratio. My threshold for payout ratios for dividend stocks is normally around 70% or so. We're at 133% for Clorox. Also, the dividend growth isn't really there for Clorox as well, but it has been growing over 48 years, almost half a century. So again, something to keep in mind. So for this reason, the dividend growth being single digits, for this reason, the payout ratio over 100%, which speaks to the financials of the company, it had me a little wary. And I actually went to Grok AI for their take on it, just to see if I was missing anything. And they did mention the payout ratio being somewhat of a red flag or an outlier. So one company that is in the consumer staples sector as well is Kimberly-Clark. And Kimberly-Clark has different that or offers different products like baby wipes, Huggies, those type of things. So I went to Kimberly-Clark, looked at their financials. I don't know why this trailing 12 months keeps getting put on there. So I went to revenue as always. Okay, so revenue somewhat the same, right? Somewhat stagnant here. Okay, operating income. Okay, operating income is increasing from 2022. Pretty substantial too. So 2.6, 2.8 over 3. Okay, very good. I like to see that. Okay, let's go to our balance sheet. Let's see what's going on here. I think it's a little slow. Let's see if I need to. There we go. Okay, so balance sheet. Again, cash and cash equivalents, a little bit all over the board. We've increased in 2023. 2024, we've somewhat dipped just a little bit. That trailing 12 months is on again. Here we go. So with cash and cash equivalents, 2020, 2021, and then 2022, it looks like we found our footing with cash and cash equivalents, and then it's slowly but surely increased. I'm not really worried about this drop off here because the boost up was so great here. So I like to see that. Total current assets, as I mentioned, and total assets, we always like to see this greater, right? So total assets, total current assets, that is greater here. So that's what I like to see. And then our retained earnings, as I mentioned. So retained earnings has been on an uptrend. Very, very different than Clorox. Again, very, very different. A consistent uptrend from 2020 here. This made me feel a lot better here. Okay. Another thing that we look at is shareholders' equity. What does shareholders' equity look like? Somewhat of a mixed bag. It's kind of up and down, but not too big of a drop off after 2022. Okay. So look at that. And then we go to cash flow. Again, we go to our net income. What does net income look like? Looks like it increased from 2023. Looks like it increased from 2023. And we were sitting pretty December in 2024 here at 2.5. That's something I like to see. Okay. Again, a stark difference from Clorox. Operating cash flow. Okay, very similar. It's just stayed stagnant around, I would say, around 3.2 and 3.5. So not a big, huge disparity there for me. And then free cash flow. What's the free cash flow look like? Somewhat of a mixed bag, like the previous chart there. Okay. And we'll go to our ratio here. So our ratio, return on investment capital, is right here. And as we can see, we found, again, 2022 dipped, found the footing, 2023 is increased, and then 2024. And not only are we in double digits, but we're in the 20th percentile right here for return on capital. Okay. And let's go to our trusty dividends here. So 3.83% dividend yield, slightly higher than Clorox. Okay. Payout ratio is a very sustainable 68.65%. That makes me feel a lot better. Dividend growth currently at 3.36%. That makes me feel a lot better. And then the growth years still half a century, 53 years. So with that being said, what I did do was we did liquidate Clorox. I felt a little bit better with Kimberly-Clark. Look, guys, they're both long-standing companies, and I don't think Clorox is going to disband anytime soon, but I did feel better switching for Kimberly-Clark. If you guys found this video helpful, feel free to like, subscribe, comment, let me know what you think. But as always, thank you, and happy investing, guys.